Good afternoon. This is Lane Dungan, market strategist at RGO Futures, covering grain market commentary. We had a WASDE report come out today, and let's first go into some price after the close. Corn closed today at 428 3/4, unchanged from open. Soybeans closed at 1122.5, up 11 3/4 cent, and wheat closed today at 528 1/4, down a half a cent. Let's go into what we've received so far this week. Monday, we had the weekly inspection report. Today, Tuesday, we received crop production and the WASDE report. Tomorrow, Wednesday, we'll receive EIA energy. Thursday, export sales. And finally, Friday, commitment of traders. Now, we did receive a flash sale this week. This occurred yesterday. 264,000 metric tons of soybeans heading to China during 2025-2026 marketing year. And in my opinion, this is part of that 8 million metric ton increase that President Trump tweeted out about last week. And just for anyone who's unfamiliar on the topic, the original deal was 12 million metric tons of soybean heading to China during the by the end of 2025. That was revised to the end of February. And with President Trump's tweet yesterday, he mentioned another 8 million metric tons on that. It's unclear if this is going to be fulfilled by February, by the end of February, since the original talk. I doubt it will be. I highly doubt it will be, actually. But this is a good thing, and the trade really believed that, too, with marketing increase and that China is back in the demand picture wanting U.S. soybeans. Now let's go into the WASDE report today. Not too much of a report happened today. Most February reports aren't, but we had a few movers. No yield change. The only exports that changed were corn. We had a small increase there to 3.3 million bushels on exports expected. And then the only movement on ending stocks was wheat, had an increase to 931 million. I did put an excerpt in there from the USDA report. Reads, China is reported to be considering buying more U.S. soybeans. Global soybean import demand is nearly unchanged from last month, so therefore if China bought more from the United States, global soybean exports will be shifted more to U.S. shipments to China and less to other markets. And I believe this is just the USDA understanding what President Trump had to say in his post and believing that what he said is going to be legitimate and actionable in the upcoming months. Really, the trade showed high potential in buying this market. The soybeans shot up roughly 50 cents last week due to the post. And this is just, in my opinion, USDA solidifying it. With the 11-cent move today, that is a great move for soybeans in the right direction. And I think this kind of piece of information is the reason that we're shifting in higher price today. Now for the commitment of traders, came out last Friday, and I really want to mostly look at soybeans here, that we're still at a 29,000 net long position. And just for anyone who's unaware of commitment of traders, or really how that happens is they are cut off on Tuesday, so they're always reported on Friday. So from Tuesday till Friday, none of that information is going to be on that Friday's report. And for this report here, we didn't really receive most of that big trade that occurred later on in the week. So I believe the managed money position this week is going to be a longer position for soybeans. And I think we're actually going to receive an adjustment in corn pricing or corn managed money position due to that corn was really following in the rally of the soybeans. We obviously didn't see the 50-cent move that soybeans did, but we did see an increase in price. And we'll look more of that here in a sec with the technicals. But this is just something to look out for. Commitment of traders can be a shock report and sometimes create gaps in the market due to just a large amount of information coming out on a Friday after markets closed. So we'll see if this Friday report really has a lot of that managed money increase in position or not. Now let's look at corn position here. We're seeing a uptrend channel here where it's just going really, a perfect textbook channel look. Today, most of the day was spent right around neutral, and then right after the USDA report came out, we did trade higher, and then we just kind of sat and just kind of fizzled out the rest of the day. we're seeing a lot of large candles in this trend, and we'll see if that continues further on. We're at about 50% retracement of the USDA lows from January, where we saw a large dip. We saw the 20-cent dip there in price, and we're really building back into that range. I think the next spot we're going to maybe sit in, if we're going to sit in a spot, is back into that consolidation that we saw earlier, really all the way through December and into November. So with this being said, the trend is still heading up, which is a great thing for corn. We've been seeing a lot of bullish numbers come out of EIA ethanol demand, or ethanol production, and export demand. Where actually most of the export demand for corn is a few months just away, but we're really seeing some of the highest export demands we've seen in several years if you're looking at them overlap. So really a great sign for corn. Just we had so much corn that I think that's still suppressing price. Also, we're in February right now, which really is, in my opinion, a price suppression due to crop insurance prices getting set during this month. So crop insurance prices is set during February based off of the December futures. So December 26 futures, everyday close on that period is going to, they're average that out, and that's typically the crop insurance price. So there's usually some typical suppression during this period, but when we go into soybeans, you'll see that's not really the case. So we'll go in there now. So quite the candlestick pattern here, or not really a pattern at all, more like just a upward trend or just an upward move. And really it was just day after day. So we can see the first initial candle was the first large green candle there was when President Trump spoke about the extra 8 million metric tons of soybean exports in deal with China. We see that, and then the trade continues to fall. We see, and then today's candle is also another green candle, and I think that's with the USDA kind of solidifying what that means and what that means for the trade. So really great things to see out of soybeans. I've got two markers on there. The 1060, I would say, is a far away a support line, and I just kind of have that based off of just a few closing prices from just really the month of January there. I have the day chart pulled up, and really with such a large move up, it's hard to pick out support and resistance lines. You could say there's one right at 1105 where the two lows met, but it's really a large increase in position showing an upward trend. Then I have the 1138 mark there. That's where we've topped out on price, and that's really the shoulder line that we see in the head and shoulder position from late October to early December there. And we could see that as our next resistance line as this trade potentially keeps going higher. But for now, we're just going to keep going with the news and keep on our toes. And there's a lot of risk management you can have in here because at the end of the day, we haven't seen solidified numbers yet. And we're mostly basing our information off post and information like that. So risk management is very key in this position to have hedging strategies in place. Now let's look at wheat. Nothing too much out of the ordinary. Pretty tight consolidation here. You could look at it as more of a triangle position or a descending triangle, which could look bullish. But if we looked into a bullish range, I think we would sit in that consolidated range around 520 to 505, where we spent most of December and January in, and then we started seeing that price increase due to Russian-Ukraine topics getting brought back into the news again. But for now, there's nothing too much coming out of the wheat technical mark. Now, I want to cover this at the end if you're interested in receiving daily market commentary, where I go into just a brief overview of what's happening today, what I'm seeing happen, where it's not as long and drawn out, and you can have some more hedging and risk management strategies. Feel free to reach out to me at ldungan@rgobrien.com or give me a call at 312-373-5366 or reach me on Twitter. I can post some of this stuff on here or some information I'm seeing in the grain markets. I post multiple reports out. And if you're wanting to receive more of those to be more up to date on the grain markets, feel free to reach out. And once again, any hedging strategies or risk management, I'm here for you. We can do a personalized strategy just for you. But ldungan@rjobrien.com or phone 312-373-5366 is the best way to reach me. So looking forward to talking to you, and if you have any questions, feel free to reach out, and we'll talk soon.
The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance, whether actual or indicated by simulated historical tests of strategies, is not indicative of future results.